The global EV market continues to expand amid a government and social shift towards energy conservation, with both the consumer and commercial sectors tapping into the technology's potential, according to data from research firm Markets and Markets, from roughly 8.15 million in 2022 to more than 39.2 million units by 2030. The worldwide EV market is anticipated to grow nearly 22% compound annual growth rate, although forecasts of the rate of EV adoption over the next decade vary given rapid changes in both government policies and the automaker manufacturing industry. In recent years, forecasts expect a strong acceleration in EV adoption, and several top investors want to be a part of this. Hey guys, welcome back to Tesla Tomorrow's by 2030. According to Global Mobility, sales of electric vehicles could account for 40% of passenger car sales in the United States. More optimistic predictions place electric vehicle sales above 50% of total sales by the same year. More automakers are joining the EV market in response to the increase in the use of EVs, expanding the selection of electric vehicles for consumers. Consumers may now choose from a wider assortment of vehicles as manufacturers have released a greater variety of EV models into the market, including the much-requested huge size. Until recently, compact cars like sedans and hatchbacks were virtually the only EV options available. But now trucks and SUVs have also been included by these car companies, and many more products are still in the works. Saudi Arabia, the Arab world's greatest economy, seeks to improve its UV output and tap into this potential, and to do so, the country may be planning to acquire an American EV manufacturer. Lucid, what impacts will this have on the EV market and shares of EV companies? Let's find out. But before we do, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. The Kingdom of Saudi Arabia has long played a central role in the international energy market, helping to drive the global economy and development in all sectors. Vision 2030 is a sustainable vision for the future of Saudi Arabia, with sustainability at the heart of everything it does, from policy development and investments to planning and infrastructure. Innovation and sustainability are among the key pillars of Saudi Arabia's Vision 2030 program. Major economic diversification drive to reduce its reliance on oil and tap into other high-growth industries. Sustainability has been at the heart of this vision since its inception. Saudi Arabia is now ushering in a new era as the kingdom aims to reach net zero by 2060. This declaration is consistent with the larger Vision 2030 objectives to spur new investment, accomplish sustainability targets, and quicken the energy transition. Therefore, having Lucid in its green arsenal will boost Saudi Arabia's goals of becoming a leader in the electric vehicle industry. By fostering and optimizing the impact of the fund's investments, Saudi Arabia's public investment fund actively drives the diversification of the kingdom's economy and the growth of particular strategic sectors. The public investment fund has maintained the sixth spot in the list of the top sovereign wealth funds in the world, with assets worth $607.42 billion. Data released by the Sovereign Wealth Fund Institute suggested that China Investment Corp topped the list with $1.35 trillion in assets, followed by the Norwegian Government Pension Fund Global and the Abu Dhabi Investment Authority, with assets worth $1.13 trillion and $790 billion, respectively. The PIF is now leading the economic diversification journey in Saudi Arabia, playing a crucial role in achieving the goals outlined in the kingdom's Vision 2030. Currently, the PIF owns 71 firms in 10 different sectors and has created more than 500,000 direct and indirect jobs. It has snapped up sports teams and electric comedians and funded new cities in the desert as it seeks to amass $2 trillion in assets by 2030. The PIF owns more than 65% of Lucid. The Sovereign Wealth Fund bought into Lucid in 2018, investing $1 billion in the company that is competing with Tesla. And in February 2021, the PIF U.S. investment firm BlackRock and others poured an additional $2.5 billion into Lucid last year. Lucid chairman Andrew Lewis said the company planned to build a factory in Saudi Arabia by 2025 or 2026. According to him, now that the car industry is effectively making and selling cars in the U.S., focus is turning to this factory. Saudi Arabia's Public Wealth Fund holds an approximately 62% stake in the U.S.-based automaker, which began production of its Air luxury sedan last September. Likewise, sometime last year, Lucid Group announced that the government of Saudi Arabia has agreed to buy up to 100,000 of its electric vehicles over the next 10 years, according to the automaker. Saudi Arabia's Ministry of Finance had agreed to buy at least 50,000 of its vehicles over the next 10 years, with the option to buy an additional 50,000 over the same period. The purchases will include vehicles built at Lucid's existing factory in Arizona, as well as a new factory it plans to build in Saudi Arabia, which will be a mix of Air sedans and upcoming new models. Additionally, it was revealed that Saudi Arabia will place modest initial orders, between 1,000 and 2,000 vehicles annually, beginning in 2023, with deliveries to the oil-rich kingdom increasing to 4,000 to 7,000 vehicles annually beginning in 2025. So will this be a challenge for Tesla? Possibly. But it shouldn't be for long. Shares of Clear Motors surged more than 90 amid speculation that the Saudi Arabia's public investment fund plans to buy out the company's shares of the California-based company jumped more than a third since January 23, making Lucid the third highest gainer and the sixth most traded stock on the Nasdaq. Therefore, if indeed the PIF ends up buying Lucid, this may pull more attention to it, as investors who are looking to put their funds into an electric vehicle company may consider investing in Lucid and not Tesla, which is currently the leading electric vehicle maker. Globally, in 2018, PIF was interested in taking Tesla private, but the deal did not materialize the situation, which has put Tesla's CEO Elon Musk on the trial for allegedly misleading investors with his tweet, which suggested that the company had secured funding for taking the company private. Although the PIF fund will be a great way for Lucid to gain more investors, it is questionable if it will eventually beat Tesla for all of 2022. The ultimate make a plunged 84 worse than Tesla's 70 plunger mid-most disputed takeover of Twitter. Lucid makes the 169 Stero Air Driving Edition limited production saloon car. However, it has been struggling to deliver the vehicles, having shipped out early in 2022. The stiff competition in the electric vehicle market is making things more challenging, and Tesla's price cuts, which the carmaker made to boost sales, are also preventing Lucid and other smaller players from cornering market share. Challenges with the supply chain have made it difficult for Lucid to increase production at its factory in Arizona. In February, the company slashed its 2022 production guidance, saying it expects to build just 12,000 to 14,000 vehicles this year, down from the 20,000 it had previously forecast. Therefore, it might take a little more for Lucid to eventually catch up with Tesla. Consumer demand for electric vehicles has risen significantly over the past 2 years. The number of electric vehicles on the road rose from around 22,000 to a little over 2 million between 2011 and 2021. Over the next 10 years, a number of factors, including environmental concerns, are anticipated to continue driving human demand for electric vehicles. Greater vehicle choice, improved battery capacity, and cost savings, improved vehicle range, is another factor that should encourage a higher uptake of electric vehicles. The fear of running out of battery power before reaching a charging facility has long discouraged buyers from acquiring an electric vehicle. However, the battery capacity of electric vehicles and their range have substantially increased and are likely to continue to expand with additional breakthroughs in battery technology. Studies have found that switching to electric vehicles saves consumers money, especially over the long run. For example, if an electric vehicle, EV, saves $8,000 to $12,000 in gasoline expenditures and maintenance during its lifetime, battery pack costs should similarly decrease, bringing EV prices closer to those of regular cars. Which automaker, though, has the technology and infrastructure necessary to make this possible? Most likely Tesla, which is why it will take a lot for any EV company to overtake it. Lucid included. What are your thoughts on this? Let us know down below. And if you want to know more about what Tesla's been up to in the previous few days, go ahead and click on this next video on your screen. I'll see you soon.